Hi everyone, welcome to another honeystocks.com stock market analysis for the month of April. Now this is going to be going out on Easter weekend. Now before I switch over to my screen share and of course walk you through a lot of the charts and a lot of the individual names that I think you should certainly look to add to your watch list for the forthcoming few weeks. I'm being asked a lot at the moment, what the hell is going on with technology? Have we found a bottom in technology? What areas of the market are showing strength and what areas should I stay away from? As always, I'm going to dive into the charts, give as much insight as I possibly can. I understand that not all technical analysis is created equal. I'm reliably informed that this is one of the best informative channels on YouTube, despite how small it is, and I think the problem is that I just don't have the time to upload more than once a month. So apologies to everybody that keeps emailing me, messaging me to do more of these. Unfortunately, my time is just taken away in other areas of my life, and I just can't do it, unfortunately. But like I said, I'm going to put my thoughts out here again, and like I said, hopefully it can help make some of you money and maybe help you manage risk a little bit better as well. So let's dive into the charts, let's see what the market's telling us, and yeah, let's get going. Now before I dive into the charts, please do pause the video, make sure you're comfortable with that. I'm sure most of you have seen this 1,000 times now. Maybe to give myself a little bit of credibility, last month's analysis, as well as calling the bottom in tech, these were the names that were provided, and this is the 4-week change in price. A couple of things to note: CLDX gapped down on earnings, and Plug Power broke key support levels. So although they're obviously minus 9%, minus 11%, hopefully you paid attention to the analysis because you would never have incurred any of those kind of numbers. But I'm also registered with the CMT Association, working my way towards my chartered status, and technical analysis is something that I'm very widely known for. And if you get some value from this, please do subscribe to our channel. I do upload around once a month. Like I said before, I just don't have the time to do any more than that. Now, what I want to do is just spend 5 minutes giving you an overview of what you can look to expect in April. And then I have around 20 individual charts and stocks, like I said before, that I think you should add to the radar. Now, where I want to start is with the S&P 500 monthly performance. Now, this is data that is going back 70 years. Now, what I want to draw your attention to is how strong of a performing month that April is. April is historically very, very good. If you don't know by now, you need to be paying attention every September. September is notoriously bad, as you can see. But I think what the data suggests to us, and this is the S&P 500 going back over the last 10 years, as we can clearly see, April is a very, very strong performer. Now, that doesn't guarantee anything. It's just a data point at the end of the day. But when we start to put all the information together, and what I'm talking about here is the S&P 500 breaking out into all-time highs. This is not a characteristic of a downtrend. This is where everybody that thinks this is a market top, they start to go into shorts because the market's at all-time highs. I would highly encourage to just follow price, do what price is telling us. The market is not overbought. This is an RSI momentum indicator, and we're not even in an overbought condition yet, so there's plenty of room for the market to run here. We've got a further expansion of breadth. This is the percentage of stocks that are trading above their 50-period simple moving average. 85% of the S&P 500 is trading above the 50-period simple moving average. That, to me, tells me that we're in a very strong market at the moment. I understand, of course, the headache that the last month or two has provided. It's been incredibly choppy for individual stocks. We've been seeing massive rallies in one sector one day and then the next day they all dropped, then another sector was moving 10-15%, and then it was just one big bowl of mess, I think, probably the best way to put it. But technology, I think, is the one area that everybody has been asking me about. If you didn't watch last month's analysis, I called the bottom in technology. That thesis proven to be correct. Since then, what I have communicated, and sorry, something else to say is, if there's any disclosures that I need to make regarding existing positions that I own, or any positions that we've recommended to clients, then I will do so. But this is one of the charts that we have communicated recently, and talking about the deterioration of breadth, and how the drop that we've seen recently in technology was very, very similar to the drop that we had back in September of last year, where the triple Qs, I think, dropped around 13%. We've seen the exact kind of same move in breadth, and I think we're obviously on the road to recovery, in my opinion. I think we can probably expect maybe a pullback early next week, maybe to fill the gap, but ultimately I think it's probably, as the data would suggest, an environment where you could look to probably buy the dip. And what I have done here as well is just showing you, I don't use the magical hindsight indicator. I have everything planned out, for support and resistance. We've also got technology relative to the S&P 500, looking like it's put in a failed breakdown. Now, for those of you that don't know, with failed breakdowns, we can get fast moves going in the opposite direction. Now, the reason relative charts are so important, if you think about, your standard money manager, hedge fund manager, their job is to outperform the market. If they don't outperform the market, they get sacked. That's just the way it is. So relative charts are very, very important for my work, because it helps us to identify the areas of the market that are going to drive out performance. Anybody can go and buy Apple, anybody can go and buy Amazon, but if you want to really get out performance year after year, relative charts are a very good way to do that. Now, the Russell 2000, I think we've obviously been in a massive chop. For those of you that follow me on social media, this is a chart that I sent out to social media around 3-4 weeks ago, highlighting a failed breakout. The reason that's important is it can give us an early clue that the market is about to undergo a period of, I guess, chop would be the word. That ultimately proven to be correct, and since then we've found a logical level of support. We've started to recover the 50 period simple moving average. So again, it does look like the small caps are on the road to recovery. They have been outperforming technology since September of last year. Again, for those of you that are maybe new to my work, this was a chart that I communicated to social media to say buy small caps because they're about to start outperforming technology, which was the leader at the time. Again, that has ultimately proven to be correct. We've also got technology relative to financials. So, if you're weighing up at the moment whether you want to buy technology stocks or whether you want to buy financial stocks, I think provided that price is above this level here, then I think technology is probably going to start to outperform financials. That hasn't been the case over the last few months, but I think this is a logical level now for technology to start to get moving. We've got the Dow very, very close to breaking out. And of course, the inverse correlation with the US dollar, which I've been banging the drum on this for months and months now. We have broken above the 200 period simple moving average in the US dollar index. So I'm in a bullish environment for the US dollar. And the question I have at the moment, I think, is, well, if we've got a ripping dollar, given the inverse correlation, as we can see with the charts, what would that mean for the S&P 500? I don't really know the answer to that. I think the thing about correlations is they can come unstuck at any time. and that's kind of what I'm hoping here. I want to see a moving US dollar index, and I also want to see the S&P 500 move higher as well. I think that would be a logical pattern to kind of develop. And of course we've got volatility which is dropping off. So I think when we put all the pieces together, I think we have to say at the moment we're in a bullish environment. I think we're in the early stages of a bull market. Are we going to have chop along the way? Are we going to have to deal with, you know, dips in the market? Of course we are. The market isn't all plain sailing, unfortunately, but there are some very obvious areas of the market for me that I am looking to take advantage of over the coming month, and of course I want to share those with you. So Biotechs. Now, one of the areas of my work is that, yes, I'm always looking for relative strength. I'm wanting to look for the areas of the market that are driving out performance. But to the other end of it, because I was able to get defensive ahead of the tech correction, and I moved to cash a few weeks ago, as those of you that follow me on social media already know, I look to take advantage of areas of the market that have been beaten down and perhaps offer a really good risk to reward proposition. And I think Biotechs probably meet that criteria that I have. Now, what I want to highlight here is the bullish divergence. Now, this is a 200 period simple moving average, which is a key part of my work. And when we have price making lower lows, but we've got a lower high with momentum, that can tell us that it's a potential bottom. So for me, I don't overcomplicate it. I'm saying Biotechs, I think XBI is a decent place to be, but ultimately, you know, if we start to break below the 200 period moving average, then that would be the point that my thesis is incorrect. So I like Biotechs, provided that they're above the 200 period moving average here. I think we've got a potential breakout here in consumer discretionary. I'm also looking to see a breakout on a relative basis. I think that would be constructive. And of course, I think semiconductors, I do have some names, mixture of growth, and obviously the names that I'm sure most of us know and love. But what I am anticipating, because of the gap up, I would fully expect semiconductors to pull back a little bit to fill that gap. But ultimately, I think with pullbacks in semiconductors, I think pullbacks in uptrends offer opportunity. And as you're going to see in a second, I own semiconductors, and although, you know, I'm not massively keen on deep pullbacks, it doesn't mean that I run for the exits because I'm a trend follower. I'm not a day trader. So let's dive into the individual names now. For disclosure, I own Applied Materials. I have bought the stock on this breakout. I have quite a significant upside objective I hope to be met. But what I am using on this chart is Fibonacci, and we've had a very, very strong breakout. Now, we haven't even really reached an overbought condition, so there's plenty of room for this to really get going. But because of the gap up in semiconductors, I would expect a little bit of a pullback here early next week. But again, it doesn't mean I'm going to sell my position. I've got my target in place. I'm just going to manage my risk and certainly hope that my upper objective is met. We've got DR Horton. Now, this is a stock that I both own and it has been recommended to clients, and this has broken out. And again, we've got our upside objective here. We are likely to have a little bit of resistance around the $100 round number. For those of you that don't understand the psychological levels, they do quite often hold true. So yes, we do have our upper objective, but I would have an eye on the $100 level. But it has broken out. Home builders is an area of the market that I have also communicated to social media in the last few weeks. It's one of the areas that has shown incredible strength throughout all the chop, and I think home builders are a decent home run bet in the current environment. I also own Cleveland Cliffs. I bought this yesterday actually on this pullback. Where is my thesis incorrect? Well, it's incorrect if we start to break below key levels. Again, it wouldn't bother me if Cleveland Cliffs pulled back and filled this gap before moving higher, but they released preliminary results, I think, and absolutely blown out the park by all accounts. I think there's a decent short interest on it, and I think that's a place that I think makes a lot of sense to me at the moment. Antero Resources, again, disclosure, I own the stock. It's also a stock that's been recommended to our clients. But the reason I'm highlighting it this week to social media is we have broken above the 200-week simple moving average. Again, that's not a bearish development. And of course, this level helps us to manage risk a little bit closer now as well. So I think as long as we're above that 200-week moving average, I think you can be bullish on Antero Resources. Another disclosure, this has been recommended to our clients. As we can see with United States Steel, it has prior history of meeting targets. Again, we recommended this actually on this breakout here, and of course it did very, very well, but I think it's broken out again, and this is the upper target that we've set for it. Will it get there? I've no idea, but I think the history of price can tell us that this can really, really move. I think it's had a previous high, I think around 180, maybe 190 or something. So again, I think United States Steel, I think you should add it to the radar. What does a breakout in Google do for tech and communication stocks? Well, I know it's not bearish. So I think we've had a sideways chop. We could call it a triangle pattern. We've had a breakout here. One thing to say about technical analysis, and I think you could quite easily do that. So I personally wouldn't look to maybe buy that breakout right now. I'd probably wait to get this level cleared, but I think that looks to be an all-time closing high for Google. So I don't see how anybody can be bearish on Google at this point. So for me, it's probably breaking out here. I've been asked a lot about Trade Desk. Now, Trade Desk has been a funny one for me. You'll notice here that I'm working off the weekly chart on this one. It's been chopping about, I think, above and below the 200-day simple moving average. But one of my members actually highlighted to me last week, and Julie, thanks. She said, "Look, Sam, I understand, the 200-day moving average is a big deal, but it's actually bouncing off the 50-week moving average, and this is absolutely held true." So I think this is actually the chart to work off. I think there's a very clear $1,000 target that you can aim for, but I think provided you're above the 50-week moving average here, let's just say as long as you're above $600, then I think you can remain bullish on Trade Desk. Mgni, I talked about this last month, highlighting a potential bottom. Of course, it's been chopping about sideways. I think we're in a bit of a consolidation triangle pattern. This is a stock that I've done very, very well on in the last few months. But what you will notice here is there's this kind of green line here. That's me set a trend line alert. So for me, I'm now waiting for a resolution higher in this pattern, and that would be the signal for me to potentially look to buy Mgni back. Of course, if it was to pull back to this level, then that would be a decent buy opportunity as well. But at the moment, I'm kind of viewing it as a triangle pattern. And despite the massive pullback, we didn't reach any oversold conditions, which is a characteristic of an uptrend, not a downtrend. Amazon, I called the bottom in Amazon last month, and very, very constructive move over the last few weeks. Yes, it's been very choppy, but it has now moved above and closed above the 200-day simple moving average. So if the market is going to continue higher, you would expect some kind of participation from Mr. Amazon. And again, we didn't reach oversold conditions, so Amazon's probably as strong as it gets, but you're not really going to get or drive any kind of relative outperformance by owning it, but it is one of those safe areas of the market, one of those safe stocks that will just keep ticking along nicely. Square Inc, again, I think I touched on this one last month regarding this support level. It's held true, but I wanted to highlight this potential trend line, and a potential breakout here would be another bullish constructive development. Exxonmobil, I think for those of you that are maybe in the camp that value is the place to be, I don't necessarily disagree with it. I think there's many areas of the market that are showing a lot of strength at the moment. I have obviously pivoted, I think, from last month, certainly the last 2 months. I made a massive pivot in my work towards value, to industrials, to the energy names. That thesis ultimately proven to be correct, but ultimately I think what we're seeing now is we're seeing further participation from all areas of the market. So I think ExxonMobil makes a lot of sense at these levels. I think as long as we're above these levels at 55, I think ExxonMobil is probably a buy at this point. We've got Mgm Resorts. Again, RSI has been in a bullish range for a very long time. And I think as long as you're above this level at $35, I think you can continue to be bullish on MGM. Again, where is your thesis incorrect? Well, for me, it's incorrect if we start to break below those levels. Disclosure, I recommended this to our clients last week. Mr. Visa, again, the reason for it, I think when we get these big drops on overnight news events that just they're completely overdone, they're overblown. For me, pullbacks like that in blue chip names especially offer opportunity, and again it's proving to be a good buy at the moment. We've moved back above the 50 period simple moving average, so for those of you that like blue chip names, I think Visa probably makes a lot of sense. Apple, it just has the look of a chart that is about to build the right side of a base. Given it's Apple, I'd be very surprised if that doesn't hold true. Now, for disclosure, I own Apple. I've owned it for a long time. I think for me, as long as Apple is above the 200-day, I don't have any problems with it. Now, clearly, recently, the relative strength has been very, very poor. But, in an environment where the market's moving to all-time highs, you would expect Apple to move, with the likes of Amazon, Microsoft, etc. I mean, they're pretty safe plays at the end of the day. But, I think we're building the right side of a base here. Now, Nike. Now, with failed moves, we can often get fast moves going in the opposite direction. Now, we can see here that there's a very clear upside objective. Now, obviously, we can see that Nike has to overcome a pretty significant hurdle here around 145. So if you are in the camp that you're bullish on Nike, certainly, I think as long as we're above these levels, I think you can own it. But I would have an eye on this level here. But ultimately, the more times a level is tested, the more likely it is to break. So you could potentially be buying here and have a 32% upside. UPS, the bigger the base, the higher in space. It's been in this trading range, very similar to Nike. But I think we're very, very close to testing the level at 178 again. And I think that if UPS can get above that hurdle, I think it probably flies at that point. Gap, not overcomplicating it. We've had a massive breakout. We've had a very valid retest. So again, I think Gap, I've got no time for the clothing whatsoever, but certainly I think if we're above these levels, then absolutely, I think Gap is fine. Hilton, again, it's showing good strength in a choppy market. It hasn't broken below key support levels. This is actually a chart I provided last month, and looks like we've pulled back, and as long as we're above these levels at 115, I think you can continue to be bullish there. United Airlines, I think it's a cup and handle pattern that we've had here. Yes, it's been choppy, but ultimately I think the path of least resistance is higher. I think there's plenty of room for this to run with RSI. So again, I think United Airlines, you should probably look to add it to the radar. Disclosure with Caterpillar, this is a chart that we provided our clients and members on this breakout at $200. It's been moving nice. Yes, it's had pullbacks like the rest of the market, but I think as long as you've got a process that helps you to stay in trades for longer, then it stops all the second guessing and should I sell here, should I sell here? Because one thing that I understand is that markets trend, stocks trend for a lot longer than you think is possible. I'm not in it for $1 or $2 moves. I'm in the market for $20, $50, $200 moves, and that's where trend following really, I guess, shines. Last month called the bottom in Nvidia. Again, ultimately it's proven to be a good call, and I think there's an upper objective here around 590, but I think everybody's kind of waiting for a monster breakout in Nvidia here. We obviously had a failed breakout here, like a lot of the charts in the market actually did this back in February, so I don't hold it against Nvidia, but ultimately I think if it breaks out, I think Nvidia probably moves at that point. Again, it's no secret to me that these support levels hold true, but I'm highlighting AMD this month because we have broken, it looks like, above the 200-day simple moving average. So I think if advanced micro devices can get a bit of continuation on this, I think AMD is probably a buy at this point. Disclosure, I own Starbucks, solid long-term uptrend. I have bought it last week on this pullback. I think for the thinking I had was I wanted to have a mixture of kind of growth names, industrial names, tech names, and just steady names that don't give a lot of volatility. And I think for me, Starbucks is a buy all day long. I'm at Starbucks pretty much every day, so yeah, I'm quite happy to own the stock, and I think there's a bit of room to run with RSI. It's showing good relative strength, so yeah, I like it. Expedia, I think we're bullish above 157. Again, it's not a bearish development when we break out above these key levels. This is dating back to July 2017. So again, Expedia is probably a buy. We've got Abercrombie and Fitch. This is dating back to May 2019. We've had a breakout, we've had a retest, solid uptrend. If you're somebody that's owned this, congratulations. I think the trend line here has a lot of merit. So again, we've got an upper objective here of $45. We've got Morgan Stanley. Now, this needs to be added to everybody's watch list. This is resistance dating back to August 2000. We recently had our target met in Morgan Stanley. It's somebody else's problem at this point. I think we're simply just looking for a breakout here above this level at $92, $93. But if Morgan Stanley's breaking out above those levels, you need to be considering owning it. We've got Costco, again, stock that's been beaten to death recently. It's on the road to recovery, in my opinion. We've reclaimed the 200-day simple moving average, so I think you can be bullish on Costco, provided that you're above this 200-day simple moving average. Now, this is a logarithmic chart, so although this looks like a small move, it's actually a 58% move. This is a chart that I actually provided one of my members last week or 2 weeks ago, and basically just showing how you can use technical analysis to just keep you in a position that you're maybe second guessing. So I'm just basically saying remain bullish above $96, and I think as long as you're above 96, I think there's a very logical 58% upside. Don't ask me why 12th century mathematics works. Fibonacci, it just does. So I think as long as you're above $96, I think Penn Gaming is probably a buy. Disney, again, I've built in a trend line here, obviously blue chip name. It looks to have found a solid support level here. And I think if we get a breakout in Disney, that's probably a good opportunity. Facebook has been in this massive range. Again, it's no surprise that it's pulled back to Fibonacci levels. So, excuse me. Now, it has broken out on a relative basis. And again, we have an upside objective here. If it can get this breakout above this level, then I think 363 would make a lot of sense. And we've also got European financials, believe it or not, close to breaking out. I think if European financials are breaking out above $20, what does that tell us? Well, it means that we need to be looking at European banks, and Lloyd's Banking Group probably fits the bill, breaking out of a base, and it looks to be starting a bit of an uptrend. So if you found some value from that, please do subscribe to our channel. Like I said, we upload around once a month, sometimes every couple of months. It just depends on my time. But if you are somebody out there that perhaps struggles a little bit, feel free to go and check out our website and what we provide. We have our annual membership where we provide every single week analysis, just like what you've just watched. We provide that on a Saturday, and we've also got a kind of bite-sized halftime analysis every Wednesday. In addition to that, we provide trade ideas. We provide you with access to our trading network, investors, traders all over the world, and lots of very smart folks. It's not a place for day traders or those of you that are maybe slinging weekly options hoping to get lucky. It's a very smart bunch that I have, and I provide charting support. But I think the one thing that I think most get a lot of value from is we provide free complete access to our full technical analysis program. So if you're somebody that would like to learn technical analysis, but also have the support for 12 months while you're learning, access to all my work, all my charts, all my trade ideas, which I'll show you what that looks like in a second. It's a pretty cool place to be, but I'll let you go and check that out. But just to kind of show you what my work looks like, this is a recent alert that we sent out for DR Horton. I think home builders breaking out was a massive part of that. And of course, there's very clear instructions. I think Mgni was a massive winner for everybody. I think this got up as high as 60 odd bucks. Plug Power, just unbelievable position to be in over the last 6 months. Of course, it's fallen away recently. We've got Penn Gaming. This was alerted above 78, which is another big winner. United States Steel, I talked about that chart 10 minutes ago. This was an alert that we sent out at $11. So I don't know anybody else that kind of offers the same level of transparency, because I log every single trade idea that I have ever put out to our members in the last 3 years. 2019, 2020, 2021. I got our members defensive ahead of the market crash. I also put out that analysis to social media as well. So, if you feel like it's a good fit for you, then like I said, go and check it out. But we really do make an impact for members. Massive performance here, 243%. Just ridiculous. Vince, Humboldt, second year in a row, trading account up over 100%. Not typical. I think what I would say is Vince trades a mixture of stock and options. We've got individual wins, Blink 800% on options. Updates here. This is one of our members, went from 96 to 160. Ridiculous. And like I said, it's just an environment where I think you've got a network. There's obviously me there on a day-to-day basis to kind of provide charting support. But I think if you're out there and you're looking to maybe get away from day trading, maybe you're just looking to learn technical analysis, or maybe you've just got a busy home life, family life, career, business, whatever your deal is. I do a lot of the hard work, so maybe you can do a little bit less, would probably be the way that I would phrase it. But feel free to go and check out our website. It's only $500 annually. We do have a membership limit. I've got no wish to have the biggest trading community on the planet. It's why I have an annual membership and I don't have monthly memberships. It's just too much work, and it's just not what I want to do with my life to just have thousands of members. So feel free to go and check that out on our website. We have around 10 memberships per month that come up. So if you feel like it's a good fit, you can go and sign up on the website. But if you've stuck around to the very end, thank you very much for watching, and maybe we can welcome you soon. Thank you.